Hello and good morning. My name is Kenny Polgari and I am back. I am your host of the party and today is Tuesday, July 18th, 2023. And here are the things that you need to know, right? It was a quiet day yesterday, right? There were no earnings reports and no macro data reports, but stocks continued to advance. This morning, we've already got 4 beats and better guidance from the banks, and so therefore we're getting off to a roaring start. Futures are mixed though. Stocks start trading at 20 times 2023 earnings and 18 times 2024 earnings, which is a bit rich. So let's just keep our eyes out. The dollar is steady, oil is up, and then gold is up as well. And what do we have for dinner tonight? We're having the pan-seared halibut. Simple to make and so delicious. Okay, yesterday was a quiet day. No economic reports, and no earnings reports, but stocks managed to rise to kick off the week. A week that's going to be marked by a slew of ongoing bank earnings, which we got today, and a slew of macro data points. What started out as a bit weaker yesterday morning due to the story out of China that their GDP was weaker than anticipated, and what that would mean for the global economy was replaced by the idea that the U.S. economy is coming in for a Goldilocks landing, one that is not too hot, not too cold, but rather just right. Many now pointing to the comments by Treasury Secretary Janet Yellen yesterday for the turnaround. She appeared on Bloomberg TV and she said, and I quote, "Many countries do depend on strong Chinese growth to promote growth in their own economies, particularly countries in Asia. And slow growth in China can have some spillover effects for the U.S. And while growth has slowed here, our labor market continues to be quite strong. I do not expect a recession." She went on to say that the U.S. is on a good path to bringing down inflation without a major weakening in the labor market. So there it is, right? Janet Yellen told us that she does not expect a recession. So I guess we're not going to have a recession, right? There won't be one. But then someone better tell that to the bond market, right? Because bond yields have been and remain inverted. And by now we know that because so many analysts have reiterated this point, that when the bond market inverts, a recession is confirmed sometime within 12 to 16 months. That is a fact. History has proven that. Every time. Well, sports fan, the bond market has been inverted since February of 2022. It is now July of 2023. And by my calculation, that's 17 months. So maybe Janet is right. There is no sign of an official recession yet. So if Janet says it ain't happening, then I guess it ain't happening, right? And then it's about earnings. And today's going to be a big day, as is the rest of the week. Recall that FactSet was predicting a 7% decline in earnings year over year. And that's not what we're seeing at the moment. Of the companies that have reported and beat, 77% of them have beaten the lowered estimates by 11%. In fact, Jamie Dimon at JP Morgan, they beat their estimate by 24%. And then 72% of the reported companies have beaten on both the top and bottom lines. And that's very encouraging for what the next 3 weeks could bring. Bloomberg Intelligence is even suggesting that we could have a weaker earnings season with a 9% drop in profits here in the U.S., while Europe could see a 12% slump. If that's the case, investors don't appear to be listening, right? Or they're not hearing this story as they take stocks higher and higher. What starts to feel like another FOMO trade, right? That fear of missing out, people, scrambling to get back in. By the end of the day, the Dow rose 76 points, the S&P gained 17, the Nasdaq was up 131, the Russell up 20, the transports, gave up 2 points, which was essentially nothing. Of those indexes, it is only the Dow Industrials that are way underperforming the broader market. The Dow is only up 4% year to date, and the broader S&P is ahead by 18%. But remember, the Dow does not include the Magnificent Seven. It only includes Apple and Microsoft, so 2 out of the 7. The S&P and Nasdaq contain all of the 7. And those 7 is Amazon, Apple, Google, Meta, Microsoft, Nvidia, and Tesla. And it is those 7 that have powered so much of the returns this year. Just an FYI, those 7 names make up $11 trillion of market capitalization and are responsible for 73% of the S&P returns this year. So that means 7 names are responsible for 13% of the 18% advance in the S&P. In any event, inflation is coming down while growth remains robust. And that is obvious by looking at the small and mid-cap sectors. The Russell is ahead by 11%, while the IJJ, which is the mid-cap 400, that's up 9%, and the IJT, which is the small-cap 600 growth, is up 9.5%. Anytime that we see the SMIDs, right, the small and mid-cap, outperforming large caps, it suggests that investors are comfortable with the pace of growth here in the U.S. 6 of the 11 broad sectors yesterday were under pressure: utilities, consumer staples, communications, energy, healthcare, and real estate. The value trade, the SPYV, was up 0.1%, and the growth trade, SPYG, was up 0.6%. Yesterday, I thought that the aerospace and defense sectors are going to get a boost after Joey made it clear that we gave all our ammunition to Ukraine, leaving us in the United States with empty shelves. And as I suggested, I thought that was a bullish commentary for investors. And what did we see? We saw investor money pour into the sector, as I expect big government contracts to be awarded. So the ITA, which is the Aerospace and Defense ETF, was up 0.5%. Names I mentioned in the letter: Lockheed Martin up 1.2%, Northrop Grumman up 0.8%, General Dynamics up 0.5%, and LHX, which is L3, was up 1.2%. My error yesterday morning, I said that we're going to get earnings from Bank of New York and PNC and Bank of America, Schwab, Morgan Stanley, as well as PLD and L&T after the bell, but we're going to get those today, right? We didn't get them yesterday. That was I had the dates mixed up. After the bell, we're going to hear from JB Hunt, OMC, and Western Alliance. In fact, I got my dates mixed up. Like I said, they are on today's calendar, so get ready for the onslaught. Expect investors to be paying close attention to what we hear from the banks and the financial companies. Now, in fact, Bank of America came in at 88 cents a share, better than the expectation, and revenues beat as well. They gave a divvy increase of 9% and improved performances across all the business lines. Net interest income was better than expected. Oh, surprise. The stock shot up by 1.5% early pre-market, but then it flipped and went slightly negative. Remember what I told you last week. The stock was up 8% coming into this report over the past 5 weeks. So it would not be surprising to see traders, the trader types, lock in some profit. So you could see some pressure on those names today. In addition, we heard from PNC, Morgan Stanley, and Bank of New York, and guess what? They beat as well. So that's 4 out of 4 so far. We've got 3 more to go before the opening bell. Let's see what happens. Economic data today includes retail sales up 0.5% expectation. Industrial production is going to be 0% the expectation. Capacity utilization supposed to come in at 79.5%. Manufacturing production of 0%. Housing starts, building permits, existing home sales are all due out later this week. This morning, U.S. futures are mixed. Dow futures are up 1, S&P's down 2, the Nasdaq was down 16, the Russell was up 1. Many focusing on the Yellen comments from yesterday, where she said that the labor market is cooling. Well, I have to say, is she aware of the strike by the 11,500 screenwriters or the pilots union that got a 40% pay increase? And now it's the hotel industry. Hotel workers across the country are rising up and demanding higher wages and better working conditions. Thousands in Southern California are up in arms. So wage pressures do not appear to be cooling at all. But they tell us that it is, so I guess it is. Kind of like nothing to see here, move on. My fear is that wages will remain sticky and that they will cause inflation to reignite in the coming months, which is the fear. And I think that's exactly what JJ and other members of the FOMC seem to be slightly concerned about. European markets are also mixed as earnings season there heats up as well. Tomorrow is going to bring us UK inflation figures ahead of the Bank of England policy meeting, which is due on August 1st, where it is expected that they will raise rates by 50 basis points as strong wage growth remains a problem. Think of that, strong wage pressures. Who would have thought? Now, we did learn that the UK grocery prices are coming down. Prices at the grocery store only rose by 14.9% in June versus the 16.5% pace in May. And now you ask, why are workers demanding higher wages? They can't put food on their table. That's why. The 10-year Treasury this morning is right in line, yielding 3.76%, the 2 years yielding 4.69%. Right? That's an inversion. The shorter duration 3-month and 6-month bills are yielding 5.4 and 5.49%. Oil is up 40 cents at 74.54 this morning as investors consider more Saudi production cuts to deal with that weaker economic, Chinese economic data, right? Data today is expected to show that U.S. inventories and stockpiles decline week over week, while U.S. shale producers are expected to see their first monthly decline since December. All while 3 Libyan oil fields are expected actually to come back online after being shuttered last week. As a result, I think we remain in this $73.50, $80 trading range for oil. And you know the Saudis would rather see oil trade at 80 plus because it supports their lifestyle. The dollar index remains sub 100 at 99.752. That's down 9 cents. But it appears to be holding right there, right? The S&P ended the day yesterday at 45.22, up 17 points. As it consolidates and digests the macro data and the move up over the past couple of weeks. We remain 5% above the short-term trend line at 42.95. So the slightest bit of negative news could see the S&P pull back quickly. More positive news could see us to attempt to push higher, but my sense is it feels tired. The best we can hope for is for the markets to tread water until valuations catch up to prices. The S&P is now trading at 20 times 2023 earnings of $224 a share for the S&P. It's trading at 18 times 2024 earnings of $240 a share, right? I think that's a bit rich considering the environment we're in, which is why I'm not chasing anything, which doesn't mean there is an opportunity. There is. You just have to find it. And the ITA, the Aerospace and Defense, was the sector to be in yesterday, right? So let's see how that goes. Okay, so we're having dinner tonight. We're having the pan-seared halibut in a lemon wine caper sauce, right? This is simple to make. It's so good. You can actually use this lemon wine caper sauce for really any white fish, right? But try it with the halibut. For this, you need 1 pound of fresh halibut, right? You need skinned. You want it skinned. And cut it into equal portions. You need a half a stick of butter, olive oil, kosher salt, black pepper. You need 3 or 4 slices of Meyer lemons are the best, but any lemon will do. You need 2 teaspoons of fresh chopped garlic. You need a 1/4 cup of white wine, Pinot Grigio Santa Margherita. You need lemon juice, fresh lemon juice. You need 2 tablespoons of capers that are drained, and you need chopped flat Italian parsley. Salt the top of the fish with just a small sprinkle of the kosher salt or sea salt, whatever you use, right? And the pepper as well. Place half of the butter and a splash of olive oil in a large medium skillet or saute pan and heat it up over like medium high. Once it's nice and hot, swirl the butter around the oil, and once it starts to bubble and get slightly brown, you're going to add the fish, top side down. Sprinkle the side that's now facing up with the rest of the salt and the pepper. Cook for 5 minutes and then gently flip the fish over. Now, when you flip it over, you're going to add the lemon slices to the pan as the fish cooks. And you're going to cook the fish for another 3 or 5 minutes, now, depending on the thickness, so you have to kind of have a sense. You want to stop the cooking just before it is fully cooked, right? Now, you're going to remove the fish, place it on a platter alongside with the cooked lemon slices. Take it all out. Now, in that same pan, keep the heat at medium, and you're going to add in the garlic. You're going to cook that, saute that around for 1 minute or so. Now add the white wine, bring it up to a boil, allow the alcohol to evaporate. Then add the lemon juice, maybe 2 tablespoons or so. You want to add the capers and the parsley. Cook that for a minute, and then remove it from the heat. Now stir in the remaining half stick of butter into that pan and let it melt. Stir it to make a nice sauce. Now put the fish back in the pan and cook it for 1 additional minute, and then remove it on the platter to serve. You want to serve each portion with a cooked lemon slice and some of the pan juices and sauce over each piece. Maybe a side of mashed potatoes and a mixed green salad works well with this, or any vegetable of your choice, but try to do something different. Maybe it's roasted potatoes. I happen to like mashed potatoes, but you could do a green vegetable as well. But you want a nice mixed green salad, which you can dress with salt and pepper, dried oregano, and then fresh lemon and olive oil. It's always a win. It's clean. It's super clean. It tastes good, and it certainly goes well with the fish. In any event, the day is about to get started, and we've got the rest of the week in front of us. So until tomorrow, take good care.